I'm Ken Leon, Director of Research, Global Fundamental Research at CFRA, and I'm here to talk to you about recent research that we've published on private credit. Negative sentiment, what's next? There's been a whirlwind of news and media and companies talking about the volatility and investments and the risk with private credit. I want to give you a glimpse here today of what we have in the report. Before I do that, let me first give our disclaimer, and now we're ready to get into the presentation here. The key takeaways from our report is that private credit today is a $2.5 to $3 trillion market, and it has grown enormously, especially in the last few years, expected to grow even further to $4 trillion by 2030. No bumps along the way. There was clearly a bull case here for a very exciting market. Today, private credit is under intense scrutiny by public equity investors and the media, and there's a host of issues that I'll get to. Additionally, the opportunity where the alternative asset managers really want to get a slice of the wealth market, and if there's government approval, the 401k market. The risk, as we see, of course, is not like banks. Private credit is loosely regulated, and certainly for the wealth market, there's going to be a need for more transparency, education, and suitability. We do want to say here, but it's in the report, stocks have been trading off significantly, and we have buying opportunities on this sell-off for these stocks being Apollo, Ares, Brookfield Asset Management, Blackstone, KKR, and Blue Owl. So what are the real worries of public investors about private credit? Things were moving along and you saw the massive increase of size, and that was essentially institutions such as pensions, sovereign funds, and other professional investors in this market. But as you move into wealth, sometimes they're not as familiar with the profile of private credit, and I think the concerns really relate to suitability. Here are 4 risks that we have in the report. Non-investment grade credit risk. This market, private credit, started in the high yield or junk area that enabled to have these high yields, very attractive for the investors that I've mentioned, and still maybe for wealth. But there's concerns really on the credit risk, which so far doesn't appear to be an issue. But then again, the structure of these funds usually are opaque. There's questions on liquidity, and certainly if you're in, it could be for 7+ years. AI disruptors and the technology sector is a second major risk related to the AI impacting software in particular, where private credit has been a significant investor over the last 5 to 10 years, and the effects it may have in terms of that being a credit. Additionally, in another report that we'll do on private credit is the tremendous investment in data centers for AI, and private credit has been one of the vehicles, along with private equity, from the firms that I've mentioned that are significant partners with the giants in technology. So the market price volatility, these are private, yet we're talking here as public equity investors, and we're seeing volatility, certainly in the stocks that I cover, but even more significantly in something called BDCs, or business development companies, which almost mirror these private credit funds. And I think when we look at the volatility, it's created concern from investors that have historically not invested in this category. And finally, policy and regulatory risk would be related to the Fed heavily regulates banks, but not the alternative asset management industry, no less private credit. We're probably going to see more regulatory oversight here. Putting it all together, it's a very interesting area. It is sizable, and we plan to publish some additional thematic reports on the subject of private credit to some of the risks that you see here. Where to get more on our research on private credit? Certainly you can go to Market Scope Advisor or reach out to CFRA, and we look forward to be engaging you in terms of our thinking related to this important subject. Thank you.